Hello, good morning everyone. This is Kotak Securities weekly fundamental podcast and I am Rini Mehta. Last week Nifty lost 1.03% while Sensex lost around 1.1%. BSE Midcap Index lost a meager 0.09% while SmallCap Index gained 0.4%. Indian stock markets remain concerned due to slowdown, higher interest rates and valuation, with inflation showing upward trajectory in the US and downward trajectory domestically. Global market sentiments were impacted by Fed Chairman Powell's statement, in which he said that the Fed may have to raise interest rates higher than previously anticipated. Hence, we believe FII flows are expected to remain volatile in emerging markets. I'll come back to the foreign flows in a bit. So, in the coming weeks, investors are closely watching the employment data and upcoming consumer price index on March 14. These are the two reports that could influence the Fed's rate decision. The persistently strong jobs market and hotter than expected January inflation data changed the outlook for Fed. So the futures markets is now pricing an endpoint for Fed rate hikes near 5.75% against the current target range of 4.5 to 4.75%. Now coming back to the foreign flows, after being net sellers in February, FIIs turned net buyers in March so far to the tune of rupees 14,361 crores. FPI flows till date in March were mixed for emerging markets. Except for India and Indonesia, all other emerging countries saw outflows. Now if we look at the stock picks for the week, our pick of the week is Gujarat State Petronet or GSPL. GSPL's third quarter EBITDA was 15% below our estimates, driven by further weak volumes and higher opex. With new KG-D6 volumes ramping up and LNG prices softer, volumes have likely bottomed and should recover from fourth quarter. We reiterate GSPL as our preferred pick among India gas, as mispricing remains glaring. So guys, we maintain buy on the stock with rating with buy rating and fair value of rupees 375, which was 380 earlier. Lastly, we also like Varun Beverages. We have a buy rating on the stock with fair value or target of rupees 1500. The stage is set for another strong year for the stock, guys. Varun Beverages is well placed to capitalize on the opportunity that the early onset of summer or likely hot summer presents. The company has expanded capacity and distribution. Secondly, it's built supply for the peak season well ahead of the usual schedule. Further, the strong growth momentum of its brand Sting continues. Overall, the stage is set for another good year and we see upside risk to our current year 2023 estimates. So do watch out for this stock, guys. That's all from my side. See you again next week. Thank you. Signing off.